Hi, my name is Harris. I'm one of your podcast hosts. I'm also a lawyer at Treadstone Law. For most Canadians, buying, selling, or refinancing real estate, a lawyer is the last thing on their mind. That's unfortunate because lawyers play a vital role in the process. But what choices do Canadians have? Lawyers can be very expensive. Well, Treadstone Law offers resources to Canadians so they have access to the information they need. Whether you sign up for a live workshop or a mailing list, we cover topics to help you make informed decisions and avoid costly mistakes. It's advice you can start using today, and best of all, it's free. Visit treadstonelaw.ca/MAS offer or click the link below to get access right now. If you're looking to retain Treadstone Law, it's never been easier. Our entire process is online. From completing the retainer agreement to your signing appointment, everything is done from the comfort of your own home. We're your digital lawyers. The best part of it is that you don't pay anything when you're retaining our firm. Visit treadstonelaw.ca/MAS offer or click on the link below to retain us right now. Enjoy the podcast. Welcome to another episode of Hustle and Grit. Today on my episode, or on our podcast, we have Jerome St. Bernard. Jerome brings to the lending world a strong business acumen and sales background honed across various industries. Jerome is equipped with the experience to guide you through the investing process. He has a strong passion for real estate investing and dedication to ensuring a rewarding customer experience. Drawn to the business by the satisfaction he gains from helping people accomplish their goals, Jerome guides his clients to make solid investments, their journey to financial freedom. Welcome to the podcast.
Thank you for having me.
Reading through your bio and kind of looking through your past history, you've got a rich history. So I kind of want to jump right into it and ask, it's clear that a lot of people, like either you're born and for somehow you want to become a mortgage broker, and other people kind of progress through their career and then they kind of find themselves becoming a mortgage agent, mortgage broker in the industry. What kind of led you through kind of coming to the mortgage side of things? Because I know you've got a very good history and you've got a plethora of experience in different industries. What was your kind of story that got you to Vine Group?
So even just to start the industry, before I was a mortgage agent, I would say I was a real estate investor, and I had a really good mortgage agent, mortgage broker who kind of serviced me at the time, and that's what interested me in the field. Right. So this was probably in my mid-20s. I was starting to be a little bit interested in real estate. And a friend of mine who was doing very well as a mortgage agent reached out to me and to talk about if I wanted to get into the market. So we ended up going through with it. I got my first property, condo in Liberty Village. I don't even want to tell you the price because it was much cheaper than it is today. But it was such a great experience, and the stuff that he showed me and the stuff that I learned was invaluable, and I wanted to kind of be that person for other people eventually. So just to tell you quickly, the condo in Liberty Village, I started out living there because I wanted to move downtown, realized it was such an amazing investment that I wanted to get out of there, rent it out because my rent would cover my mortgage. And then maybe a year later, we're discussing things, and I said, "Hey, man, this was a really good investment. It's working out good for me." I think I even had it on Airbnb for a while just to kind of test the markets. And he said, "Okay, tell me when you're ready for another one." And I was like, "What does that mean?" And he's like, "Well, your condo's gone up 150 to 200,000 in value already, and this is in a year and change. We can refinance, get you some equity out of there, and we can do this again, fully leverage the first home." And my mind was kind of blown by the process. I said, "What do you mean?" I learned, I did it myself. And from there, I kind of said, I'm really interested in this field. And I was unaware that you could do things like this and leverage your home and play with it, that I wanted to teach other people that. So having such a good experience in getting my first property and then my second property, understanding how to leverage your property and use equity, got me involved. And eventually I said, you know what, I want to take mortgages and finance serious. And I went to school, per se, started learning, reading everything I could. Yeah.
So I guess so you're safe to say you're almost self-taught. You didn't have anybody kind of holding your hands. You had some guidance, but you didn't
Yes.
have anybody like kind of like showing you exactly what to do at every single step. You kind of figured it out yourself as to how to invest and grow, and you had a good friend who's kind of giving you some advice or support, but it was
Yes.
kind of safe to say it was you who was kind of leading the charge.
Leading the charge 100%, but I did have good people around me. This guy in particular. So I actually started working with him for a while, learning from him as best as I
Mm,
could. I think about a year and some change I was working with him before I decided to go off on my own. And that's when I started looking for good people who are the best people, and came across Vine Group, right? So I know
yeah,
you interviewed some other Vine Group agents. They're very impressive. They impressed me. Um,
yeah, no,
they're,
Vine
I
Group
don't know
is
how to
awesome.
they're
Yeah, but
awesome. And the saying goes, you never want to be the smartest in the room. You always want smarter people around you. And I
yeah,
really felt that way. So just being
yeah.
around people I could learn, I said, let me get over here. And I've been loving it ever since.
Yeah, but I also find that like correct me if I'm wrong, and I feel like a lot of individuals like if a client comes to me and asks hey, like I need to get a mortgage, should I go to a bank or a broker? My It's a no-brainer. I always say broker because for a host of different reasons. Brokers is a lifelong relationship with the same person. You
Yeah.
know, if you go to a bank and ask for a mortgage, if that person's really good at what they're doing, by the time you renew, they're no longer going to be there. If the broker's really good at what they're doing, they're going to be there. It's like it's completely the opposite thing. But at the
You're
same
stealing my
time,
talking points. That's one of my go-tos. I
no,
love
but
that line. No, seriously, why would they be there in 5 years?
yeah,
The structure of a bank, you're supposed to keep going up. So
yeah, yeah,
yeah, it's a
yeah.
great
So
one.
like it's hard to build a relationship, right? Like how are you going to like build a portfolio out, right?
Exactly.
But
Exactly.
I find that like it's always brokers, but a lot of people are not as comfortable going to a broker because they always see, you know, and I'm not saying I hate banks. I love banks. So I work with banks all the time, but they see a logo around all the time and they feel comfortable saying, hey, this is where I should go because I've seen it so many times that I know I'm going to get the best product or service or whatever it is. But I find that, and so there's a learning curve. And I guess that safe to say that you going through this kind of journey, it's good that you kind of understand the fears and that people have that are holding them back, investing, buying things, and using brokers and other people around them to actually grow their investment or portfolio, whether it's their first home, whatever it may be.
100%. 100%. Honestly, it's all about trust, right? So
Yeah,
it's a little bit easier when you know there's, a bank at the corner. It's not going anywhere. But I feel like in this industry, if you can show you're not here today, gone tomorrow, instead of being an
yeah,
institution that's going to be at the corner, you're going to be an individual that's going to be around. That's the difference when people are like, okay, this guy will be there forever. He's not going to go anywhere. As against, like you said, in the institution will stay there, but the people have changed. So the people
yeah.
you started making the plan with are not the people that are going to, and it's not like they're sharing notes or anything. You want someone who knows your situation, knows where you came from, and kind of where you're going to lead you along the way. So,
Yeah, and then
100% agree.
yeah, and the institutions again, like it's good, like they're really great. I'm not hating on banks, but I'm just saying, like, okay, I
I should
go in,
probably preface that as well that I have to work with all the banks. I don't hate
yeah,
the banks. They are our partners, as we like to call them.
yeah. There's partners, but then if you go to a bank, like you're working with what, like 100 or so banks, 50 or whatever it is, you're
Yeah,
working
50
with a
plus.
lot of different banks, right?
Mhm.
So when somebody comes to you, right, if I come to you and I say, listen, I need to do like ABC and I got XYZ, you're gonna kind of go through all of the lenders that you've got to get me the best price. Whereas the bank's kind of saying, okay, well, what's the best product I can give them, not necessarily what's the right product. And that's kind of a bit of there's a nuance there that I don't think people understand completely.
100%, and it might not just be what's the best product or what's the best rate. Some banks will simply say no to some clients, right? They all have
Yeah.
their specific little, specific little rules and niches that they're good at or bad at, right? So maybe one bank it's a 100% yes, one bank it's 100% no. I never want you to come to me and me just say I can't get this for you. I want to say this is the option, this is option B, this is option C.
Yeah.
Sometimes that looks like going from an A lender to a B lender for a specific program, maybe temporarily. Sometimes people require private money. Maybe they need some
Yeah.
money for constructions or flipping homes. These are all the things we can kind of discuss in making your plan. As against you go to the bank on the corner, they can only do one thing. It's the cookie cutter.
Yeah.
You have the perfect job. Everything has to fit perfect. And even if you were to go to them, I would still say go to a broker because I can compare all those cookie cutter lenders for example, and get you the best one for you or the best products for you.
Yeah, I mean, I feel like also it's not like, I mean, even the biggest banks. I'm sure you guys have the biggest banks on your roster too in terms of going out and
Mhm.
getting the best deals. But it's not always the right place for somebody to be at. The analogy I give everybody is like if I'm a shoe size 10 and the bank only has a 9 and an 11, they're gonna give me a shoe size 11. Now it's the best they've got. It's not the right one that is good for me, right? So it's
I
like.
might steal that line. I'm ready. I'm taking notes. I'm taking notes from you. That was a good one.
So it's like, yeah, but so it is. It's the best they've got, but it's not the right. And I feel
Yeah,
like you're saying, like a private lending, for example, something that you brought up right now, I think is very misunderstood. I feel like a lot of people are saying, "Hey, yeah, the rates are really high, this and that." But if you need money fast, this is really good. Like if you find a really good deal and you need to buy it right away, you don't have time to wait for a bank to approve everything. You can get private mortgage to hold you over until you get a proper deal, but you don't
of
lose that
course.
deal.
Of course, exactly. And if it's a good deal, that might actually be beneficial to you money wise, even if it's a higher rate, just because of the deal you found, right? So it's all about the
Yeah.
solution, just kind of empowering our clients with the knowledge so they can make that decision for themselves. We're not really here to push you in one direction or the other. We want to lay everything out in front of you, and it's like what works for you, right? And
Yeah.
might not be the same thing that works for your neighbor. So it's
Yeah.
different, very, very individual.
So having said that, what is it like if any of my listeners actually, just to preface this, if anybody does want to reach out to Jerome, depending on where you're listening from, his contact information is going to be below or on the side. But if they do want to reach out, what's the kind of process? Are you completely digital? Do you meet in person? What's the kind of process to work with you to get a mortgage?
Yeah, so I mean, it used to kind of be whatever you needed. We'd meet in person. We can meet up, talk about it. To be honest,
Mm,
since COVID, I've been a lot more digital, and I feel like most people prefer. We can do the whole process online. We never have to meet. We can set up a Zoom call. We can do a phone call. I'm always available by text, email. I try to be as accessible as possible. I know the bank closes at a certain time. I don't close. If there's ever an emergency, I will pick up my phone, and there have been some emergencies. So I kind of like to
yeah.
let people know the difference there. You put an offer in on a Saturday. You don't want to wait till Monday to ask the bank, hey, do you think
Yeah.
we can push it up a little bit? But for the most part, I am 100% online. I try to, as best as I can, over the phone or over Zoom, establish that trust and that rapport, because I think the most important thing is, trust, confidentiality, the type of things that you would expect from someone helping you with such a big decision. So
Yeah.
that's what it's like working with me, right? And funny enough, I just the other day I was working with, it was like a childhood friend of mine, doing the mortgage, and then her brother contacted me and said, "Hey, can you help me with the mortgage?" And so I was doing both these deals at the same time, and then they had like a family dinner, and one of them said, "Hey, I saw your friend
Yeah.
Jerome the other day. We were working on some stuff." And they're like, "Hey, I also was talking to Jerome about some stuff." And then they realized they both just bought property through me, and they were like super impressed that I hadn't talked about the other one, brother or sister,
Yeah.
at any point in the process, right? So I think people appreciate that,
Yeah.
um, and
I
it's
mean, that's
helpful.
very important. I feel like that confidentiality, especially amongst family, it's like, yeah, I mean, it's your brother, your sister, your parents, and they're gonna know you bought a house or whatever it is, but you don't necessarily want to kind of expose everything to them and let them know or bring them in on your financing, and that's it's fair point to keep it kind of just between you and them.
Of course, it's very personal. It's very personal, and people
Yeah,
are very particular about their financial situations, because you kind of feel naked. People are seeing what your credit score is, exactly your
yeah.
income, the income of your spouse or partner or whoever else is on title. It's details that most people want to keep private, and I think, yeah, it's helpful if you can show them that this is just between us, right? So
Yeah.
yeah.
No, so then what's the process? Do they then do you do like an initial call and then kind of go through everything or do you kind of do we have to kind of submit an application? How do we get kick things off with just that initial analysis process, that initial kind of figuring out or that dive into understanding what the client's needs are? How do you kind of approach that?
Yeah, so you know what? I put a lot of importance on the very first call. Like I'm trying to get to know
Mm-hmm.
you. I want to find out what you've done in the past, kind of like where you're coming from, where you're going. What are your
Hmm.
goals? How do we best get you there? If you've worked with a bank in the past, how was the process? Things that you like, things that you didn't like. And the whole time I'm on the phone, I'm sitting here with a pen and paper making notes. Right? Some
Mm-hmm.
people have had bad experience with TD. Don't want to go to TD. This is why. I moved within 3 years last year. I had to pay a large penalty. I'm moving often. Then I'm going to say maybe we want to go to a variable mortgage, something that has a
Mm-hmm.
lower break penalty, stuff like that, where I'm just taking notes to try to find you the best solution. After that, I'm going to say, I'm going to obviously ask what you do for a living, tell you what kind of documents I'll need to verify your income. And then we move to the portal. So I'll send you an email, which we have really good software at Vine Group. They've been working very hard on it over the past year, where it's kind of you log in. I've already put all my notes in, so we know the type of
Mm-hmm.
person you are, the type of documents we need. You log into your computer and you're just dragging and dropping the documents. I can see as they're coming in and continue working on the file.
Oh, nice.
Yeah,
So
and
there's no like emails going back and forth with this. I know what happens before a lot of times is
yeah.
with you've got like a lot of people are sending back and forth like a million different emails, and sometimes stuff just gets lost just because it's going back and forth. These portals are really important. I find in tracking what you've sent, in understanding what you've received, and just everybody being on that same page.
Oh, even for my process, like before looking for a specific document, going through our email thread, trying to find the exact attachment.
Yeah,
If I don't put it
yeah,
in a folder right away, where is it
yeah,
type of thing? It's so much better because it's just there, and me and you are looking at the same screen. So I might say,
yeah,
hey, open up box two. I want to like give you a call. Let's look at this T4. This says this. Let's go over this pay stub together. We can look at it together, and we're looking at the same screen. I feel like it's very
yeah.
helpful. There may still be emails back and forth. Looking for this, looking for that, but for the most part, I can email you from the portal, say, hey, we're still missing this document, or can you update this document? And they can just put it in and I can see it in real time.
Yeah. No, I mean, I feel like that's the most important thing that we just kind of stated where like, hey, go to this document or whatever are on that on your portal and you're looking at the same thing. Cause I find that sometimes when there's a lot of documents going back and forth, maybe there's different versions of something that you've sent and you're thinking you're looking at a pay stub. The client thinks they're looking at a pay stub, but they're two different things and you're
Yeah,
talking about two different things. So, and those kind of miscommunications don't happen often, but they're often enough to like there's so much on the line here that everybody does need to be on the same page, which is
of
why I
course.
love portals.
Of course. Yeah. No, I agree. It's been super helpful, and for the most part my clients have loved it. It's a lot
Yeah,
less, print, sign, scan. Everything's digital.
yeah,
Yeah.
yeah. So can you sign everything on the portal?
Yes.
Oh, nice. So
Yeah.
it's basically you're not printing anything. You're just kind of looking at the documents and through the portal, having a conversation with you, and then if you decide you want to move forward, you just sign on the portal and everything's done.
And you know what? That might actually be my favorite part because prior to the portal, we could do everything online except for a few legal documents.
Mm-hmm.
So there's something called a privacy agreement, which pretty much allows me to pull your credit. And we'd always have to print that, have to sign it, get it back. Now that it's digital, we actually have it where you click through, do you approve? Do you approve? You can click this, yes. No need to print, scan. That was always one of the hardest things. And speaking of credit, this just came to me comparing banks to brokers, and this is even if you want to stay on the A side. I love the fact that we only have to pull your credits once for the most part.
Mm-hmm.
So, for example, if you were car shopping and you wanted to go to, I don't know, Toyota, and then you wanted to go to
Yeah.
Honda, and you wanted to go to Mercedes, every time you were to go to a different dealership, they would pull your credit, hard pull. And the same
Yeah.
thing goes for banks, but people don't go from bank to bank to bank. So that's kind of what I like to say our job is, right? We see all the products. You don't have to drive from one bank to the other. No one would do that. But if you did, and some people every now and then are like, I'm going to drive to 3, 4 banks and see what they will offer me, they're going to pull your credit every single time, right? And
Yeah.
that's going to be a hit on your credit. So this is something really good for the broker channel. What we do is we're creating an application. That's what we're doing with this portal. So we're going to get your permission. We're going to pull your credit. Now your credit is attached to your application, and we're going to shop this deal for you. So I might say, hey,
Yeah.
Sculpture, take a look. Can we work with this client? Hey, TD, take a look. And we've only done that one pull. So that's something that I think is also helpful, because I do get that question. Hey, is this a hard pull? Is this a soft pull? And it is a hard
Yeah.
pull. We need the real stuff to see all the
Yeah.
details. But we don't want to do it
I
more than
I actually
necessary.
actually had a friend who's like exactly what you're kind of discussing, and he was like going out for a mortgage, and he's like, you know what, like they do a hard pull, so it's gonna
Hmm.
affect my credit, so I have to go to all the banks on the same day, and he planned out going to like 6 banks on the same day
Wow,
because
I've
he's like,
heard
maybe I can
that.
get around this, and I'm like, why don't you just go to a mortgage broker? Because
Yeah,
it's
yeah,
so much easier. First of all,
exactly.
like to spend that entire day. I don't know if this plan of yours is gonna work because you're hoping that somehow it doesn't report by the time you get to the next bank. But why don't
Yeah,
you just go to a mortgage broker? Because they'll also, like, the other thing is once you're not only pulling it, right? You also have an established relationship with the people at the bank because you're probably giving them other mortgages. Whereas somebody like
exactly.
me going to like TD, right? I'm
Hmm.
like, I go to them every 5 years or whatever. It's not going to be the same as you going to TD every single day
Of
for the next
course.
5 years saying,
Yeah.
here, I got a deal, I got a deal. Like, they're gonna treat you very differently. That's fortunately or unfortunately, whatever way it may be, it's just how it is, and therefore you got to understand that and just use brokers to your advantage in terms of going to the banks and speaking and negotiating on your behalf.
I think mortgage brokers should hire you to talk on our behalf.
no,
And you just tell people these things. You do a commercial or something.
but
Because
I'm being
you got all the
genuine.
points,
I'm
man.
being genuine. The reason why I say this is honestly, so I've gone to law school in the States, and I've worked in the States for some time, and the trend over there is generally you go to a broker. You don't necessarily going to directly to a bank is much less of a habit there than it is here. And
Interesting.
recently people are going and going to brokers more, and I think it's like a 50-50 now. But I
Yeah,
don't think it should be a 50-50. My opinion, it should be a 90-10, right?
I agree.
Because brokers, that's what it is. It's like when you have more brokers, you have more financial institutions. They need to focus on lending and finding good financial products and whatever it is, and the brokers assess people and put them in the right vehicle for whatever length that they want.
Exactly. It's an extra layer of knowledge and someone,
Yeah,
just looking over everything and making sure that you're making sense. It's just
yeah,
an
yeah.
extra set of eyes at the least.
Yeah, and yeah, I 100% agree. But I want to shift gears a little bit now. So, and I got the entire process down, but I want to talk a little bit more about market, because since we're on the mortgage brokers and you guys are subject matter experts, my question to you, and this is more of a crystal ball question, is, and you kind of discussed this earlier about like a friend moving a couple times, and you're kind of telling them to move into a variable because there's less penalties when you move out. There's more like nuance to it than that. It's kind of simplified. But my kind of question to you is, in this day's rate environment, with Bank of Canada constantly pushing up rates, are you a fixed or variable recommender?
The fixed or variable. So as always, the answer is it depends. It depends on you, but like I know where you're going with this. There's so much going on. There's wars, inflation,
Mm,
with the bond yields, and it is hard to predict. But we've been going up pretty aggressively since I'd say the end of COVID, right? So we've seen the Bank of Canada continuously do these raises. And with the variable in the Bank of Canada rate, the fixed rate follows, right? So it's not like we're going to get a big discount on the fixed that we had before. Um,
hmm
but we will be stuck there if we choose a fix. So I'm opposed to a 5-year fixed right now because I do think we are in a high environment, and I do believe in the coming year or two there are a lot of signs that the pressure will ease, right? So the kind of plan is that we're saying, and I'm sure maybe Hugo mentioned this to you as well because I know he does a lot of short-term fixed, is if you are unwilling to do the variable, which of course could still go up. The next Bank
hmm
of Canada announcement I think is December 7th, but the benefit is it will go up, but you can ride the wave back down, right?
Yeah.
Prior to COVID, people who were in the variable were loving us because once COVID hit, they had to lower rates, so everyone was riding down, and now it's
Yeah.
riding back up. So it's
Yeah.
cyclical, right? So we don't want you to get stuck in the high fixed rate for the next 5 years. We would prefer that you came down with the variable, or if you do not want to do a variable, do a short-term fixed, because we're anticipating the pressures to ease in a year or two. So instead of riding down on the variable wave, you can also do a 1-year fixed or a 2-year fixed, and the thought process is at that time we're going to have better options available,
Okay.
right?
So if somebody wants to do a 5-year mortgage, you want to get into a 5-year term, you would More likely than not, obviously, this is a caveat to all my listeners. This is not any kind of advice. Go speak to Jerome, reach out to him to make sure that your particular situation is
Let's talk
understood.
about
But
it. Yeah.
yeah, in general, you're saying on a 5-year term, you'd still argue for a variable.
On a 5-year term, I would have variable. I feel like this is a high. Uh, we're in a very high fixed rate
Yeah,
range, and I don't want my clients to be stuck there 3 or 4 years from now when everyone on the variables are kind of on the slide
yeah,
down, and you're still stuck here, right? It's been
yeah,
it's been tight, right, for a lot of people. Slowly watching their rates get higher and higher. I get calls every Bank of Canada announcement. My phone's ringing off the hook. Hey, should we lock in now? Should we? Right, and we got to go through your risk tolerance. We have to, look at
yeah,
your monthly budget and see, can you afford, if this were to go up anymore, is it going to cripple your family? Or you're gonna have to sell your house, right? Haven't had any horror stories yet, but these are the questions we have to ask
yeah,
and kind of go through every single time. And if there is space to wait it out. Otherwise, lock into a fix. But I'm looking short term fixed because
yeah.
we're hoping there is light at the end of this tunnel here.
Yeah, I mean, I think it's definitely coming down. Like I find like statistically, it's not fine. It's not me and an opinion, but
Mhm.
statistically, variables have always outperformed like fixed.
Yes.
There's very few environments where they haven't, and even if like and variable has that optionality that in case you need to move, there's a prepayment penalty is a fraction of what it is on a fix, and I can't explain to people how many times we've seen people, yeah, I've got another job, I gotta move for one reason or another, you're in a fixed, and now it's costing you an arm and a leg. Like 30,000 penalties I've seen are very normal for one of these kind of transactions. We've
Yeah.
seen them go up as high as 80,000. So like
Crazy.
all of this really just I always push for variable, but I do know obviously I'm not the mortgage person, but I that's what my kind of push is always. But you guys know better. But the fact that like, yeah, fix, some people are scared right now, and if you want to get into a fix, a 2 year to just kind of, that 2 year is just you're paying a premium on it just so that like you feel kind of comforted that you're not going to be, your
Nothing's gonna
payments aren't going to switch
change.
on you. Yeah,
Yeah. And you
yeah,
know what? You mentioned something very important, because I was talking mostly about when rates, I think, will level out, but the penalty is huge as well. Like, what if, your circumstance does change and you have to get out of this contract, or, you're in a 5-year fixed and you want to sell, downsize, move or whatever.
yeah.
You can't without that large penalty on top of these high interest rates. So even people that are in a fixed rate now that it's coming to an end, you still might be at the 2-3% if you started it 5 years ago where fixed rates
Yeah.
were, and now you're about to jump into the market where you have to jump almost double to the 5%. For somewhere in the fives is where your fixed rate is going to be, right? So I would recommend, if you need that flexibility, if there maybe is going to be a change of scenery, do the
Mm-hmm.
variable, just so much less penalties.
Yeah, no,
Yeah.
100%. And the other thing is also, I feel like people are just scared also because, oh my God, rates are 4, 5, 6%. I mean, those are normal rates. What was abnormal was the 1% that I was looking at. Like, that's
Yeah.
not right. That's not
Yeah.
sustainable. This is more of a normalized market. And to that, like, even people were kind of looking at buying houses. I'm advising you go buy now just because like
The
prices are
prices
good.
are down.
Yeah, and it's
Yeah.
also, you can have an offer that you put in, and you can actually have a financing condition. You
Yeah.
can have a home inspection. A year
Yeah.
ago, you couldn't have that. You just
Yeah.
had to like pray to God that like, you know what, they listed it for 1 million. I'm putting in an offer for 3 million or whatever it is,
Yeah.
and I pray that they
Exactly.
accept it, and then somebody gives me that money. There's just so
Yeah.
much at risk there. It's not like you're buying a chocolate bar.
No, it's so true. It's so true. And like you said, these are normal rates. Like, in the last, I don't know, 5 years and some change, this is high. Like, I would say the normal was in the 3% range for a while. That seemed
Yeah,
to, but talking to anyone of, let's say, our parents' generation, and I'm saying
yeah,
these are the highest rates we've ever seen, and they're like, that's not even close. We bought our house, it was 12%,
yeah,
13%.
yeah,
That was
yeah,
normal, right? So it all
yeah,
depends. It
yeah.
depends. It really does.
They're
Um,
doing, I think there was I was looking at some stats, and for like a decade, interest rates were above 12%. Like that was
yeah,
the norm
yeah.
for anybody buying a house.
I mean, that's also when you could get a house for like $10. but
Yeah,
but
but
I
you're
get
earning
it.
like 50 cents though. So.
True. It's all relative.
Yeah, so it's I mean, but at the same time, affordability has gone down. I'm not going to argue like to your
True.
point, like I'm not going to argue it hasn't. Like even though houses are cheaper, we earn less, but like the price to the house ratio or the income ratio has changed significantly, but that's why interest rates have kind of come down as well.
It
So
is.
either you're paying the bank or you're paying whoever you bought the house from, one or the other.
To be honest, over the last year or two, I've seen such an increase in the amount of, especially first-time homebuyers, that not want to but have to use a cosigner.
Mm,
And I don't think it's necessarily a bad thing if you have someone to lean on. Use it, especially for your getting your foot in the door. But it
yeah.
has become a part of the conversation. Hey, we can get you this much. If this isn't what you're looking for, maybe you have someone who can help co-sign to get you something, a little bit more in your range. Because affordability has gone down.
Yeah.
Good point.
So what, and I kind of want to wrap this up with this. What's your advice to first time home buyers or even repeat home buyers? What's something that they can take away given the environment? I know that one of the things is, for example, like you just said, if you're looking for fix, it's a 2 year term that you should kind of aim for. But for those people who are kind of on the sidelines, they're thinking, okay, should I buy? Should I not buy? Are interest rates going to go up? What's some guidance that you can give them that will kind of guide them for the next 6 months or a year for their buying decision? Should they wait? Should they save up more money? Should they kind of start looking right now? What's kind of your perspective on all of that?
I kind of think we're in the perfect storm. If I was
Mm,
sitting on money right now, I would be looking for steals in the market. I hate to sound like an opportunist, but there are going to be some, I don't know, not desperate sellers, but people that want to downsize. Things are getting very
yeah.
expensive, so there might be steals. But further than that is we're seeing such a drastic decrease in price. A lot of people, and me and Hugo talked a lot about this, the concept of date the rate, marry the home, which was
Yeah.
a lot of people are opposed to buying right now because they think the rates are too high. But the rates being this high have caused such a decrease in price that the monthly payments are almost the same. So two things are going to happen. We already are anticipating, based on all the economic signs, that the rates are going to head down. We already
Mm-hmm.
know that real estate comes in waves. So even if the purchase price is down, it's going to go up over the next few years. So we're kind of at that perfect point where if you can afford to pay a higher rate for a couple of years, you're going to be laughing in a few.
Yeah.
Right. And real estate should always
Yeah.
be a long-term investment. So if you get in
Yeah.
now, maybe your rates are a little bit higher, but get on a variable, ride down the wave. At the same time, as soon as they stop with these increases, we're going to see the values start to spring up again. So that's actually going to
Yeah.
be kind of really good timing. You can never call the bottom of a market, but I think once we see Bank of Canada start to keep things the same or even head down, we're going to see a lot of movement in real estate, and the prices will start creep back to where they were 6, 7 months ago. Right.
Yeah.
So I think it is a good time to buy for those two reasons if you can afford it. The most important thing you can do for yourself is budget. And you have to budget worst case scenario. So if your rate right now is mid fives, budget for 6%, just in case it
Mm-hmm.
has to go up before it falls again. If you can afford that, I think in the long term, you're going to be better off than you were. But you need to be prepared for the next year or two because there's a lot of things going on in the world right now. To turn on any news channel and you can,
Yeah.
listen,
Yeah.
right? So give yourself a
Yeah.
little bit of space, but I still think it's a good move.
No, I mean, I completely agree with you. And for those people who are like waiting for the bottom of the market, I mean, when you can point out the bottom of the market, it means that you're on your way back up, and it's going to spring back up much faster than it came down.
Much
So
faster, exactly.
yeah, no, I 100% agree. Love your advice. Again, if anybody wants to contact Jerome, depending on where you're listening, his information is going to be on the side or below. Definitely reach out to him and continue the conversation. I always say, and I want to end off this podcast with the fact that if you're looking for a house, always reach out to a broker, get your financing right, because you might find a good deal. And then if you're looking for financing, it's not the smartest way. You got to sort that out first and then go start searching. So definitely reach out to Jerome. Thank you for coming on the podcast.
Thank you so much for having me. It was a pleasure.